Hello, and welcome to The View from Swift Business Forum Ireland, filmed on location in Dublin. I'm Joy Macknight, Managing Editor at The Banker, and I'm joined by Ad van der Poel, Head of Product Management, Global Transaction Services EMEA at Bank of America Merrill Lynch, to talk about transforming the Irish payments landscape. Ad, thanks so much for joining us today.
You're welcome.
So what are the drivers of change in the Irish payments landscape?
Well, that's an interesting question because the drivers are very similar across Europe, and the different drivers that are there actually need to be looked at in a combination, right? It's a careful balance between, on the one hand, regulation, right, such as PSD2, such as EU Payer, such as GDPR, but at the same time, of course, the opportunity to innovate, technological advancement, open banking. All those drivers that we see around Europe are relevant for Ireland as well. I think it's interesting to see for Ireland that if you look at the number of e-payment transactions per capita, Ireland is higher than the average in the EU. And actually Ireland has 35% more card transactions than the average in the EU. So Ireland is already way up there. And will only improve from an electronic perspective.
Okay, so you mentioned PSD2, Payment Services Directive 2. Yes. What do the banks need to do to be ready for that coming in September?
Well, a lot. Of course, they should already have the different APIs, right? They should have made that available already January 2018. On top of that, they had to create a test environment by March this year for the different third parties that want to use those APIs. And then, of course, we will have the specifications of the different components of PSD2. So as a consequence of that, they may have to adapt a little bit of what they already built. But on top of that, the number of specific items around fraud management, around reporting, but also strong customer authentication is a very interesting topic. Mm-hmm. And all these elements need to come together by September this year.
Okay, and there's also a big global move towards open banking. Obviously, it's live already in the UK, but it's happening in many other jurisdictions. What kind of benefits do you think that it can bring to the payments industry?
I think it will bring a lot of innovation, to the point that innovation that we don't even recognize at the moment, right? The first step is what everybody's doing, is creating those APIs for third-party providers to use those APIs to give clients, with their consent, access to the bank environment, right? Through those third parties. Of course, there's a primary focus on, let's say, the consumer side and small and medium enterprise side, but it's a big topic in the corporate world as well, where maybe on the consumer side, there's more fintechs or challenger banks that come in. On the corporate side, I would expect a lot from ERP providers, treasury management system providers. So different players will start using those APIs. On top of that, I think, and that's actually much more exciting, is once we go through that first generation of these APIs, we'll look at the next generation, and then people will start to think, all right, how can I actually use these APIs? Because they give me quick access to certain specific information, and in our case from our bank accounts, right, and payment transactions and so forth. And how can I use that in my core environment, right? So we already have conversations with clients that are trying to think, all right, where in my environment do I need to initiate a payment? And initially, these conversations are primarily focused with corporate clients that have consumers as their clients. But over time, that will become a B2B conversation as well.
Okay. And my last question is really about what Bank of America Merrill Lynch is doing in terms of innovating around its payments, products, and services.
Yes, and that's also a very interesting topic, because the challenge that all of us existing organizations, but specifically larger organizations, have is, okay, you can innovate, but how do you then incorporate that in your standing organization, right? And the way we try to do that is to innovate with a group of people, but that group of people needs to collaborate with the people in the standing organization. Right? And so, yes, of course, that takes a bit more time. Collaboration takes time, right? Rather than having a group that is dedicated on a topic. But the big benefit of that is that whatever comes out of that can then be used in the standing organization pretty much immediately. And then on top of that, we try not to reinvent the wheel ourselves. We do collaborate with players in the market that already have invented certain elements, right? And that may be a fintech, that may be another type of partner. And then we try to reuse that when we do innovation.
Excellent. Thank you so much for your insights, Ad.
Thank you for having me.